Hello everyone, welcome to Just Invest Today, and today we're talking about the 13F filings. People who invested in Alibaba, people who are still bullish on Alibaba and they're not selling, they have strong conviction. So we're gonna get into it in this video because remember, we just seen the earnings report. People are hating on Alibaba, people don't like the stock. But we're going to remain strong. We're going to see the super investors and what they're doing, see if we can get any clues. But before that, can you please like this video, subscribe to my channel, man. I'm on the road to 1,000 subscribers. Can you please help me out and help me get there? So the first person we're going to look at is Greg Alexander. And you got to remember who Greg Alexander is. Warren Buffett actually recommended to actually invest in him if anything happened. He's one of the 3 people to invest in and if anything happens. So Greg Alexander is a well-respected value investor in the value investing community. So we have to look at what he buys and see what he's doing. And remember, he added 28% to Alibaba. And you got to remember, he has invested in Alibaba before. It's like almost every quarter he's been making Alibaba buys. Like Q1, that was his last time he bought Alibaba. Look at that. He added 147%. So his activity in buying Baba has been pretty much steadfast, and he's still very bullish on Alibaba. So we have to respect that, right? And just looking at this portfolio, like you can just tell look at his top 5 holdings. Stellantis, Alibaba, Equitable Holdings, Builders, and Yandex. But Alibaba is the second position. So it just reminds you that, guys, Alibaba in the short term, yes, it's killing us, but in the long run, it's gonna fix itself, in my opinion. There's still risk to Alibaba's purchase, there's still regulatory risk, stuff could always happen, macroeconomics and all that good stuff. So still, if you're looking from a bottom-up perspective on the business, it's still doing well, it's still strong, so we still have that insight. Look who else? Ray Dalio of Bridgewater Associates. It can't get any better than this. Like, Ray Dalio is like the macroeconomic guru of investing, and he just understands the aspect of investing and what's going on in the world. So he's remaining bullish on Alibaba, and it's the top 3 holdings. When it comes to individual stocks, is Alibaba, 2.6%, and he just added 130% to his shares. So think about that. But we have to have a little slight edge on that, a little slight reminder that he's kind of biased on China because he's always visiting China. He has I think he has a spot in China too. So you still got to make sure that you understand that he is kind of biased towards China because he just loves China that much. So, but even if he does, he still wouldn't harm his purchases. He still wouldn't just ruin his shareholders by buying into Baba if he doesn't believe in the company and doesn't believe in what they're doing. So that just goes to show you that, yes, Alibaba, PDD, JD.com, they're all undervalued right now. And I still think they have so much potential. So that's interesting buy. He sold off Walmart, Procter & Gamble, Johnson & Johnson. He added Coca-Cola, a little bit of Pepsi. So he's doing his thing. And you just have to remember that China market is undervalued. And that's what most of these value investors are seeing. They understand the long game, the short-term pain, the long-term gain. And that's what they're doing. They're putting their money where their mouth is. And when you really think about it, who's selling Alibaba? Only Monish was really selling Alibaba. All the gurus understand the fundamentals of Alibaba and there's room to grow. Bill Miller. We know legendary Bill Miller, man. He beat the S&P 15 years in a row. So he has his eyes on the market. He knows what's going on. And he's really innovative. He's really forward thinking. And look, he's been reducing everything. But boom! Adds 8% to his Alibaba purchase, but he's reducing everything else pretty much on his top holdings. And remember, the top holdings is what matters because that's the most conviction people have on their bet. And he's seeing, remember, you have to be a contrarian when you're in this investing game. If you just do everything every way what the market does, you just invest in the S&P, you're just going to get market returns. But you got to do the opposite if you want those big returns. And if you have that view of basically Baba being a good business. So just look what he did. He did reduce Alphabet, he reduced Amazon, Splunk, Facebook, ADT, Norwegian Cruise Line. Like, he's reducing pretty much everything. And he's adding in small positions here and there. Herbalife. But just the main thing you have to respect is that, because Alibaba, remember, Alibaba, it's in its top 10. When companies are in your top 10, top 5, that's the companies where you have the most conviction. You understand the potential for the company. So him investing in Alibaba, that's huge. And then boom, we got Tom Rooser. He's extremely good value investor too. He's averaged like really good percentage in the market. He's added 8% again to Alibaba. So we're just seeing like, that's the thing. Like, when you're looking at these super investors, most of them are selling. Like, they're just selling down the position because they understand their position in the market. But when you're looking at the overall state, you can see some portions are overvalued, but the Chinese market, Alibaba, JD.com, PDD, like, all those Chinese stocks are undervalued. There's more potential there than the American market right now. So you're seeing everyone sell out. Like, look at this, selling out Berkshire, Nestle, Google, Philip Morris, Paranoid. Like, they're selling out of these businesses, but they're getting into Alibaba because they see the value. They see how it has so much potential to run in the future. So, guys, I know you might be down and out right now. You're saying, you're crying, you're moaning, you're groaning that Alibaba is not doing well, but chill. The long-term potential is still there for Alibaba, as you've seen these guru value investors, these super investors are still buying in. They're still looking at it as a positive. So what do you think, guys? Do you think more super investors are going to buy into Alibaba as it's been declining? It's at like 145 right now, whatever it is, man. But anyways, man, like this video, subscribe to my channel, man. And if you're an Alibaba bull, if you're not, if you're a bear, comment down below. Peace!